Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the sterling versus US dollar. We're seeing up and down price action in the over the last 4-hour bars. Let's take a look at this from a technical perspective and try to make sense of the up and down volatility. I'm going to start by taking a look at the 4-hour chart of this currency pair. And what we've seen over the last few weeks is a pretty steady move to the upside here. We bottomed right here around the 123.68, and we moved higher in trading last week, and again this week's trading. The move to the upside has did take the price above the 61.8% retracement. That's of the move up from this July high right through here to the low price that we saw in the early month of October, or the early parts of October, I should say. The 61.8 came in at 127.189, and the price did move above that level in trading yesterday, which should have led to further upside potential here. But as you can see, the buyers turned to sellers. The price started, or the traders started to use that 61.8% as resistance, and we've rotated back to the downside in trading here today. In the current 4-hour bar, we've moved down to a new session low for this pair, but we are seeing a rebound, currently trading 126.92. So that's a look at the 4-hour chart. What we can say is the 61.8% retracement at 127.189 is probably now resistance, and we've seen that over the last few hours of trading. So be aware of that number. Going forward, we need to get above that level and stay above that level to increase the bullish bias. So now, what else sticks out in this chart? And I'm going to put a horizontal line here at the 126.14 level. And really, this level is important to me. Why? Because you see this low, you see this low, you see this low. And that was a pretty solid floor here. Each of the time the market reached that level, we saw a bounce to the upside here. And then we got a little messy through here and then fell below it here and hadn't returned to that area until end of last week's trading, where we came right up to that high price or that level and found sellers toward the end of the last week. And we also remained above the 50% retracement in trading this week of that same move down from July. So this area right here between 125.88 and 126.14 has an interest to me as a area that if the price is going to go lower, we need to get and stay below those levels now that the 61.8 found willing sellers against that level. So keep that area in mind, 126.14, 125.88. Now let's change this chart to the an hourly chart and try to make sense of it from this perspective. Here's our 126.14 level. Here's our 125.88 level. So we know those levels are in play. And now let's put a horizontal or a trend line in here, connecting these lows through here. And you can see that the low price in trading here today has moved down toward that upward sloping trend line. If the price were to move below it, and it's currently probably around the 126.53 level, that would probably increase the bearish bias. Have traders looking toward the 14 level. But also near that 14 level is now the rising 100-hour moving average, which comes in at 126.18. So that would make sense as a level of a target level on the downside to get through, including the 14 and 18 level. And then we have the 50% retracement here at 125.88. As a target. That's a 50% off the 4-hour chart, that longer-term move from July. Now, let's do something else here and put a Fibonacci retracement from this low right here. This is the last swing low to the high price that we saw in trading today. And the 38.2% retracement is in play here, along with the 50% retracement, which happens to be right at the 50% retracement level off of that 4-hour chart, that longer-term chart. I'll show you. Watch this level, 125.90 here. If I take this out right here, the 90 level changes to an 88, so it's a 1 point or 1.5 points away from the 90 level. But you can see how that level increases is important. So not only do we have the 100-hour moving average, 14 level, the 38.2, that is our next target on further downside at 126.14 to 24, but we also have the 50% retracement and the 50% retracement on the 4-hour chart coming in around the 125.88 and 90 level. So be aware of those levels on the downside and the 200 bar moving average, or the 200 hour moving average, is also moving higher and moving up toward that 50% retracement, currently at 61.8% retracement. So that's a long look, but a good analysis of the sterling versus US dollar after the price failed above the 61.8% retracement. When you have that failure and you have traders looking to lean against that level, it kind of gives you the idea that maybe the high is in place, and we'll look toward this the 61.8 now as resistance, and hope that the price rotates further to the downside, breaking through these support levels or testing these support levels as we go along the way. My name is Greg Michalowski. I hope you found this video useful. Good fortune with your trading. Bye-bye now.